So that's a big difference. Gary Hager is with Integrated Wealth Management in New Jersey, and he joins me now to talk about all this. Is this, Gary, what you attribute the tanking, if you will, of the stock market to? Is it the oil?
Yeah, oil, the gas prices, it's the 800-pound gorilla in the economic room, and it's still stomping around and will continue to stomp around for some time to come.
Yeah, you had some dire predictions a bit earlier on the air, and you said this thing's going to go up and up and up in terms of the price of a barrel of oil.
It is, it is. There is a lot of demand, world demand. There is a lot, in my opinion, still speculation in the market. And while I expect a near-term correction in oil, I think overall the prices are still higher. Yeah. And that is obviously distributing out to the rest of the economy through all of the products that oil basically are a part of.
Okay. There was a silver lining in the month of May, wasn't there, with regard to the housing market? I mean, there were seen some uptick in the sales of homes. Is that, can you hang your head on that? Or
no. Oh. No, I am going to go and state that the housing market, some people would say that it's bottomed. Some people would say that it's actually starting to recover in some micro areas in both the Northeast and in the Southeast. But I really believe that the housing market will not experience true growth and true sales recovery until sometime in 2009 and maybe even 2010. And again, it's this overhang. Oil, the price of oil, the price of goods, the price of commodities is just slowing the entire machine down. Oil is a lubricant, but not in this example. Yeah. I mean, it is really coming up the works.
It's really, it's clogging the drains here, I guess, if you will. That's what it's doing.
It is absolutely clogging what's going on right now.
So if someone is looking at their 401k statements and they look at it regularly, an average worker or somebody who's getting ready to retire, and they're looking and saying, I'm seeing this stuff slashed in half. It's like a 201k now. What do you do?
I have people that receive statements where they don't even look at it. They see it, it's on the table, it's breakfast, coffee, it goes in the garbage. What can people do basically to defend their 401k? Number one is understanding that markets are cyclical, that things will come back. But if they really want to be proactive, what they need to do is a couple of things. One, they need to check the list of funds that are available to them within their particular provider and look towards the alternative markets that might be available that will produce returns that are positive when the regular market is doing poorly. So that would be step one. Step two would be, let's say those funds don't exist. Can you just basically grin and bear it and say that, well, I'm just going to have to wait for it to come back? What you can do is you can talk to the fiduciary at your 401k, and you could basically, as a group, employees, sit and say, we need more opportunities to be able to invest in things and other items and mutual funds that will produce in bad times.
Well, I guess it makes sense. People have got to be proactive and take interest and take care of their money. And I know they can do that with you. Gary Hager with Integrated Wealth Management. Thanks for giving us advice.
Thanks, Alex. Good to see you.